moving on, we also have the management of Syngene International joining us. Jonathan Hunt, the MD and CEO, talking to us about their earnings performance. Jonathan, hi, good to be speaking with you. It seems like there's a bit of a miss on revenue growth as well as guidance this time. But for FY25, you are guiding that the growth is going to be in the range of, let's say, high single to low double digits. Talk to us about what are the factors that are going to lead to it and what gives you the confidence that you will be able to achieve this.
So if you just step back and look at the year overall, we delivered 9% growth for the full year. And during it, quarter 1, 2, and 3, I think pretty much in line with what we expected. The fourth quarter is always our biggest of the year. And that turned out to be the case this year. We exited with, by sheer revenue, the largest quarter of the year. But it wasn't quite as much growth as we were expecting, or it didn't reach the levels that we thought. And there's a couple of things going on there, both in the marketplace and technologically. As you know, as a business, we serve two different segments, simplistically. Major biopharma companies, they're sort of Fortune 500 corporations, large, profitable, strong balance sheets. And then the other segment are startups, biotech startup companies. And their operating dynamics are very, very different. So the startup life, as it were, raise capital, have a great scientific idea, and normally they raise funding for a year or 2 years, take their science forward, and then they're back into the capital markets, refinancing. So it's this constant flip-flop for them between driving their science and back into the capital markets for fundraising. And last year was a challenging year in the US for many of those companies to refinance. You have to go back a couple of years, 2 or 3 years ago, we had an all-time peak in the amount of funding that had gone into biotech. So of course, you can roll forward a couple of years, those businesses start to burn through their cash, come back to the capital markets, and not all of them managed in the fourth quarter to refinance. And simply, if they don't raise new capital, they can't spend it with us. So we had a few more cancellations of contracts or delaying of those contracts in the fourth quarter than we predicted.
With respect to your US biotech funding, you are saying it's witnessing green shoots, and that expected to be strong going forward, particularly later part of the year. Does this mean in H2 it will be strong and the pressure could, or do you think the pressure could persist?
Yeah, I think that's a reasonable sort of characterization of the commentary we've made. So we saw something like $23 billion of new capital flow into the US biotech sector in the fourth quarter. But those businesses that have raised that funding will take 1-2 quarters at least to go out, think about how they're going to deploy it, put things out for bid, for contract wins, and then start to spend it. Which is why there's this lag between capital raising and spending going up. And that's why I think it signals that you'll see more of that growth in the second half of the year. They raise the money now, they spend it in 2 quarters.
Jonathan, what about the Capex guidance? What's the capital expenditure you plan to do in FY25 and where exactly will you be investing all of that?
Yeah, sure. So we deployed $55 million last year. Next year will be a little bit ahead of that. I think it'll be about 60 million. And it's all the usual sort of themes within our business. Automation, digitization, improving productivity through an upgrading of technologies. I think about half of that should go towards our research discovery services business. The remainder will be going into the CDMO part, the development and manufacturing, and then the usual sort of innovation upgrades, software licenses, deployment of AI technologies across the business. But innovation, automation, a little bit into robotics, and then 60 million overall, which is just a nudge ahead of what we did last year.
Right. Can you tell us what is the status of the Stellis facility? Will you stick to your earlier guidance of getting it operational in the second half?
I'll Okay. No guidance on the finance side of it, but it's progressing well. I mean, the teams are in there. They're making the changes and the upgrades. It's progressing absolutely to plan. So I expect, as we said, to complete that upgrade, getting it operational or available to be operational in the second half of the year. So yeah, no news is good news though.
Okay, and wanted an update on the Mangalore API facility as well. We see now new order wins happening for that facility. What is expected going forward for Mangalore API?
Yeah, I mean, there are ongoing contract discussions. There's development work that's going there, but it's all rolled up into our overall guidance for the year ahead. So we've said that we expect revenue to increase from high single digits to low double digits. Remember, that's on a constant currency base. So we reported 9% growth for the full year with currency in the last year. If we take the currency out to get the true constant currency baseline, that's about 6%. So 6% last year is becoming high single digits to low double digits in the year ahead. And that's a synthesis of what we think is going on in the research services, what we think is going on in large and small molecule development and manufacturing. And it gives you a sign of confidence for the year ahead. We talked a little bit about the phasing. I think it'll be slower in the first half, and then it'll build into the second half with an implied strong exit to the end of the year.
Okay, Jonathan, on that note, we let you go. Appreciate your time.
If you like this video, then like, share and subscribe to ET Now.